Welcome to TradersPost office hours for April 1st, 2025.
I
I'm
thought that
Tom
was about to
Hartman.
be an April Fool's joke.
Not at all.
You're like
Your
April 1st. No, it's April
volume's a little
2nd.
low, Mike. There you go. So I'm here. Mike Christensen's here, and John Wage, and we need to discuss very fervently how April Fool's needs to stop. Because on just a regular day, the internet can convince me that Finland's not a real country, and on April 1st, I'm just completely lost. Don't know what to do.
That makes perfect sense.
Are you guys being fooled by any of the stuff online?
I heard that we already bought Greenland, so I guess that's a thing. That
I
was up for
remember,
sale, wasn't it?
right? Well, 2 years ago, TradingView did they had these retail traders tarot cards, which to me was like fantastic. I would love to have a set of tarot cards that my wife could use, and it's trading related or whatever. I'm looking to order it and all that, and it's not online. I was very upset. And now with AI and bots, forget it. Can't tell what's true. What is true is Traders Post is, I think, the best automated trading platform in the known universe. I don't see how it can be anything other than that. I keep looking for second place, and it's like distant, very, very far behind.
That is not an April Fool's joke. Is that what I'm understanding?
Exactly. All right, so I wanted to start off this week with just to let everyone know for Blueprint. I'm still on the fence here for whether we're going to be doing this Thursday a dividend trading bot or a dividend capture trading bot or an astrology bot. So I want to get a final vote from either Mike or John as to which one you guys want. If you guys tie, then I'm going to just decide myself.
So the academic in me gets real excited about the dividend capture bot. I think that represents, what used to be some potential arbitrage. I'm not sure that the opportunity really exists anymore, but maybe it's worth coding just to run through the thought experiment more than anything. But then again, like even John's idea around having to press a button and it buying a little bit of Bitcoin each time is a super cool idea and a good way to tap into our webhook system. So there's lots of ways to demonstrate. An astrology system is just another way to demonstrate how to wire things up to TradersPost. So I'll go either way.
The moon phase indicator, like there's not really anything to develop. I think that's probably the issue with that astrology one is
there's no
signal. Oh no, there's tons.
Oh, yeah.
You're just thinking about the moon phases. There's whether Mercury's in retrograde or not. It's if Saturn is trining, whatever. There's all kinds of things we can toss into there. We could even do what's called a zodiacal release-in for an individual chart, almost like a birth chart, but for every given one. That might be fun as well. I think the real issue here is that if it turns out to be very profitable, because no one's looking at it for an edge in the markets, well, then we might have to retool the whole profit model for Traders Post and turn it into an astrology trading system. So, okay, let's go with... Yeah,
I will have another one for Blueprint in the future here. John and I were just talking about it. I'd like to develop a system for managing position size using a more quantitative approach called Optimal F. And I'll lay that out for you. But that could be a future PineScript episode we do that just shows how to calculate position size for each trade that you take based on your historical performance and the probability distribution of those trades, and it updates in real time. So each trade you take, it updates that probability distribution. It increases or decreases the position size accordingly, and it manages your risk automatically. So that could be something that I think we code together pretty easily.
Oh, awesome. I'll add that to the list.
Cool.
Okay, so then I'll vote and I'll say, in honor of April Fool's and Liberation Day, let's just go ahead with Astrology Bot on Thursday.
Bot. Let's do it.
And set that up. And it'll be a lot more high-tech than the moon phases. But the moon phases will be in there, I promise you that. Next up, John, you were talking about the new a la carte billing that Traders Post is going to be rolling out. It's a subject that's come up a few times now with on different office hours where people want a more flexible billing style to be able to have different strategies and brokers connected to their account and not hit up against these limits. Could you tell us a little bit more about those?
Yeah, definitely. So we're basically going to roll out the ability to buy additional live or paper brokers. So the plan will come with a certain amount that you're allowed to have. But then if you want more, you can either upgrade your plan or you can stay on your current plan and just increase the quantity. I can share my screen real quick if we want to get a little
Sure.
sneak peek.
Show and tell.
So actually, just now I was kind of working on some of these. Internally, we're calling them like feature gates or upsell wrappers. So whenever you have a broker connected and you can see I don't have any more live brokers over here. I'm hit with this modal that I can then add additional live brokers. That's basically it. It allows you to choose your billing interval. You can switch your plan. You can change your quantity of your add-ons, and then you can go over to submit the payment. There's going to be a couple other changes. You'll notice that the menu looks slightly different. This is something that Mike has been wanting us to do for a long time. We've been inching our way there, where we have like a consistent left menu now, where it never changes, and we use the concept of like a sub menu now, so that you can always have one consistent style and one consistent menu. But if you go, again, this is another style of the feature gate where I don't have any additional live brokers, and it hits me with this gate. And then from there, I can upgrade my plan. And if I were to complete this flow, so I guess you can just demonstrate it real quick, but watch, it's probably going to break because I'm in the middle of working on it. So if I increase my live brokers to 2,
Aha, we got your credit card number.
Really easy to remember, actually.
And then as soon as I complete this order, the modal will disappear, and then this feature gate behind the screen will go away, and now I can connect another live broker. So it's pretty simple, but it should give a lot more flexibility, and maybe in the future we'll have other add-ons as we continue to expand the platform. There might be other quantity or usage-based add-ons that we may add, but things like analytics, those won't be usage-based, and those will just be available on probably all of the plans.
And you can see the bottom left there where you're going to know right away how many you're using, how many you have total, and you should be able to upgrade. This is something people have been talking about this for a while. Ever since I've heard of TradersPost, they wanted the ability to do this, especially for prop firm traders. They like the idea of being able to have more access to greater paper accounts and live accounts. So this is great. This is us showing right there in the wild that we do listen to what you guys are saying, and we want to make TradersPost even better. I know it's hard to imagine it can be better than it is right now, but it can be, and we're on our way there.
It was definitely mostly driven by the prop firm, because like the prop firm people have like 20 of these sim accounts. And funnily enough, I was telling, actually, never mind. I won't mention that on there. never mind.
So maybe one other thing to add to this is that we are honoring the discount codes against the additional add-ons. So if you're seeing that it's $5 an account for paper accounts or prop firm eval accounts and combos or combines, excuse me, just remember that your coupon code will apply to those. So it'll be a 50% off discount or 30% off discount, whatever coupon you currently have access to, it'll apply to the add-ons as well.
Excellent. Okay. Moving on to some of the questions we received this week. First user asked, what is the best broker to paper trade futures with TradersPost? Now, John, you answered this, and you were saying TradeStation and TradeView. And I just wanted to get an idea here of when you hear best broker in your mind, like what are the qualities that you're looking for there?
Fast and reliable, primarily. Both TradeStation and TradeView are pretty fast and pretty reliable. And those are the only two that support paper trading futures. So those are your options.
Excellent.
So we want to do a little bit better than that, though. One of the things we're working on internally is a more robust editorial process that kind of explains the experience that you can expect with any of these brokers in each of these asset classes. That's something we're going to be releasing over the next several months. But the thought process is we'd like to have a more in-depth review about each broker, the speed of their response, account opening incentives, commission ranges you can expect, overall experience on the broker's side. What does the experience look like when you log into the account? What kind of tools are available to you? What features do they support? And so on and so forth. We'll try to get as robust and as in-depth as we can. And we're hoping to kind of create more of a fully featured qualitative as well as quantitative review of each of the brokers on our platform and exchanges as well. But hopefully that's useful, because you asked the right question, Tom. If somebody says, what is the best broker? Well, what does that mean to you? What makes something best to you? Is there a specific feature you're looking for? Is it risk management features? Is it commissions that matter to you? So hopefully, as we outline all of these details that we've gathered about the experience each user has had on our platform with those brokers, it'll give you a little more insight to the whole ecosystem of what's available to you.
Yeah. And I get that there's sometimes some hesitance for people to maybe switch to a different broker or open up a second broker account or something like that if there's features there that that their strategy requires, or that it would run more efficiently that way. Because I know we've all seen in support tickets and feedback from people where you go, well, it's because you're on interactive brokers. If you're on something else, it might run smoother than you are right now. And they go, but I really like interactive brokers. And I always feel like iffy of saying, well, get on it, just switch to a different broker and use it, and you're not going to have this problem anymore. But if we had a more, like you were saying here, Mike, editorial content that explains why you might like the experience in a different one, it might make that conversation a little bit easier than, hey, this bug is here, and you're not going to have that bug in another broker.
Exactly.
All right. Someone was asking, is there any way we set up limit per day when total profit reaches $100 per day and it stops trading for that ticker for the day and resumes the next day? Now, obviously, the answer to this is no, we can't set up that sort of limitation within TradersPost. But the reason I have this question here is that I wanted to get a general answer here of how do we separate the idea of where every now and then people will have these granular types of options that they want within the account, and it's something that potentially we could create within TradersPost, but it doesn't necessarily make sense to move down that direction. It becomes too specific. When you guys see a question like this, do you think to yourself, okay, this is part of a suite of options that features that we should have inside of TradersPost where you can control it, or this is really something you should be controlling on your strategy side, even if you could code it?
I think both, to be honest. We've heard a lot of these types of risk management techniques, being able to lock yourself out of an account, max drawdown for the day, max number of trades, max profit target. And all of these things make sense. We have access to a lot of that data and could implement those types of tools. I think we just need to kind of prioritize which risk management tools would be most useful. So we'll take an inventory of what's been requested in the past and kind of prioritize it from there. In many cases, users don't have the ability to code something like this into their PineScript strategy because they either don't have the PineScript skills or they're using a third-party strategy or something like that. So integrating it into TradersPost allows them to augment the signal that is coming from their strategy and add their own risk criteria to it. So I definitely think both are feasible paths to take. Right now, what we're doing is encouraging people to build most of this into PineScript as we continue to prioritize these types of features. And I think many of the roadmap requests we have on our list are so large that it's going to take a while to get some of those risk management features.
Right. I keep thinking about stuff like we can add to features that are within a set that you would expect from for prompt from traders, and then all of a sudden they'll say like, well, then this implies that you should have these other 5, and like there's no end to that sort of limit. The classic one to me is the multiple take profits. Right? We don't have multiple take profits, and people ask for that sort of thing all the time. And when you're prompt from trading, you might want to be or move to break even or different types of trailing. You want to have these features, and I just think to myself, oh my god, what does the setting screen look like if we had all these different options available? That's just crazy. But I guess that's a you and John problem for the interface, how to actually surface that information.
To clarify, we do support multiple take profits. You can send 2 separate signals for your entry. and one has a first take profit and the second one has a second take profit to it. So it is possible. You just have to code your strategy in a way that would effectively enter two positions with two different take profit and stop loss zones.
Yeah, but the people will often bring it up in terms of they want those limit orders to be canceled in the bracket style with the initial one, and then the follow up question is, well, then how do I cancel just one take profit level, the way you might do it in an interface, and then you go,
Right.
okay, well,
We can't do that because we're not sending back the order ID. You're correct about that. I mean, you can do it, but it would cancel everything for that ticker. So I get it. It is complicated on some level, and maybe to your point, Tom, we'll integrate one feature that solves one problem, and then 6 more requests come in with it. Well, as Steve Jobs said so correctly on stage one time, we can please some of the people some of the time.
That's right. All right. Okay. This is along the same lines. How do I clear all the daily balance history in the broker? The analytics are all wrong because of several account balances, resets, and tests. I'm going to clear all the history and fresh start so that the metrics are showing correctly. So although we can do that on a paper account, we can't do that within the broker account. But I was wondering if this is something that's going to come down the line with analytics.
I think with the solution will probably be to enhance the TradersPost paper reset functionality so that it can also clear those daily balances, and then probably expose that functionality for all the other brokers as well. It's just resetting positions and orders won't be there for non-TradersPost paper brokers. So that way you can basically always clear the balance history for any broker. But another way to do it today is just to create a new TradersPost paper broker, delete the other one, and then swap your subscription to use the new TradersPost paper broker. And it'll have 0 order history, 0 positions, and 0 daily balance history.
Cool. All right. This came from Discord. I had a question. If I use limit order for entry and exit, what happens if I'm filled? And then my algo sends a reverse signal to TradersPost. John, you answered it would submit the exit order, wait for it to fill, and then submit the entry order. But we will only wait up to 120 seconds for the order to fill before we fail the trade. If the exit order fills, then we will submit the entry order. So I'm just curious here about the qualification here of the 120 seconds. Why was this sort of like, why is that limit there? Why is it 120 seconds? Is this something that people run into a lot?
Well, today, like in theory, I guess we could wait forever for that exit order to fill. But it doesn't really make sense. Like if you're swapping sides, if the exit order doesn't fill immediately, you're not going to want to, like if that exit order fills 24 hours later, you're not going to want to still enter the new position. Like I would assume that the signal is invalid at that point. So we decide, that's just a decision that I made when I was building it, is that 120 seconds is the max that we'll wait. And the user could actually configure that exit wait timeout and lower it to something lower if they, if they want to, they don't want to wait 120 seconds at all. They could lower it to 60 seconds.
Can they
but
increase it?
They can increase it. 120 is the max.
Okay.
But in the future, we could potentially allow them to increase it. But some of the work that we're doing for analytics is kind of like a prerequisite to being able to support waiting for longer periods of time. Because we don't have basically like any kind of signal from the broker to tell us when an order fills. We have to go to the broker and ask if the order is filled. But once we have the signal from the broker that says this order is filled, then that could be the signal to that trade to say, hey, the exit order filled. Now go ahead and submit the entry order. So we basically move from a mechanism where we're basically constantly checking the status of the order to just waiting for the broker to tell us that the order has filled. But it gets complicated because those signals might not make it to us. There are scenarios where that signal that the order filled doesn't make it to us. So it'd have to be like a combination of the constant checking the broker to see if it's filled, But we would just do it on like a less aggressive interval, and we would rely on the signal from the broker that it's filled in real time primarily, but like maybe every 60 seconds we check the status manually with the broker to see if it's filled, to make sure that we don't ever have any scenarios where like an order is just sitting there waiting. Our system is waiting for it to be filled, but it's actually already been filled on the broker side.
Right. Okay. All right. Next up here, I'm currently using the Big Move Algo Indicator on TradingView. It's designed to identify the start and end of trends and generates entry and exit alerts based on those trend signals, not specific price levels. My goal is to automate trading based on these alerts within TradeStation platform. I'd like to inquire about the feasibility of integrating this TradingView indicator with your automated trading system to execute trades in TradeStation. Could you please explain how your system handles automation triggered by external alerts, particularly those that signal trend changes rather than specific price targets? So this is actually the sort of situation I find myself in. And for myself, I will take the trend signal and then enter as a market order now. So I'm not worried about the the price that I'm entering in, because I just want to enter right this second. Is there another way of thinking about this that maybe I'm not thinking about? If you're getting a trend signal from an indicator, you have no choice really than to wait for a market order.
I think that's basically it. I mean, you can send a signal and have it do a limit order, but it's going to basically submit a limit order with a limit price of whatever the current price is at that time, which is really kind of the same thing, except worse, because you might not get that limit order filled. So yeah, just sending the signal to us when you get the trend alert. If it's, a reversal or bullish trend or a bearish trend, then you would send that signal to us and we can enter a long position or a short position based on that alert.
I like entering for something like that, the trend changes and it is a limit order, but at, let's say, VWAP, and then I know, okay, I'm getting the best price I can enter in there. Yeah, go ahead, Mike.
Yeah, I was just going to say, if you're managing a much larger position, that's where the other domain of algorithmic trading really comes in. There are firms out there that will help you execute that trade, with guaranteed VWAP, or they'll do, book sweeps, and they'll try to get your order filled in a way that fulfills it at the best price possible. We, of course, are not that type of algorithmic trading platform. So typically what we recommend, especially with smaller sizing, is just to submit a market order, unless the liquidity is so thin on the instrument that you're trading that you would be subjected to huge slippage, like let's say a 2026 far out futures contract that barely has anyone else on the other side of the trade. If you're trading a front month contract or something like that, and it's highly liquid, I think you're probably okay with a market order. You're not going to see that much slippage.
I wanted to also slip that question into there because I think it implies this feature that I so desperately want in TradersPost. I'd love to see it there, which is like this, basically a component that's keeping track of multiple signals. So here the trend signal can come in. Maybe there's a regular thing that's being sent all the time when we touch a VWAP, when RSI is overbought, oversold, whatever, but the signal only gets executed if the switch is flipped, that the trend is now in the bullish. Yeah. I could just imagine a stack there where, you have 8 different things it's paying attention to, and you have a bunch of signals being sent to the same component. So I just like that someone else had like a similar type of idea.
I think the gate-based triggers are really interesting. Something we've seen on the list as well. It's come up at least 2 or 3 times on our show so far. So it's definitely something we should look into, but we have to figure out how to make it in a way that it's generally useful for most scenarios.
That's right. All right. Last one here. I saw you have a feature under development to close all positions automatically when a window is closing. Any timeline on this? I was wondering if this is on the nearby roadmap.
It's not at the moment, but maybe sometime this year, hopefully.
Perfect. Well, you have the indicator that we made that can close your trade. That's why we create those indicators as a supplement, just as an idea for you. You could always code that within your own strategies, because that's something that's easily taken care of on on the strategy side.
PineScript. Yeah, I think
Yeah.
this is why Tom and I spend so much time on Blueprint trying to look for those types of opportunities. To my point earlier about risk management, I want to explore this optimal F concept, because while that's something we could develop on TradersPost, we'd like to see it out there in the wild first, give you guys access to the concept, see if it's interesting to you. And if it is, then it's something we can look at emulating on our platform as well. But if you've got your own, if you have the ability to write in PineScript or use some of the tools that we published, then you're at least one step closer to your goals.
All right, so that's the end for the questions. But I did want to pull up. I love the Reddit threads that we were taking a look at last week, and I just wanted to try that again. Got some good feedback on that. So this post is on Reddit a couple of days ago. Someone's saying that they have automated trading strategies and they need help with backtesting. So they say, I recently built a trading bot using Python and deployed it live. It has been performing quite well, generating consistent profits, and has exceeded my initial expectations. However, one major challenge I am facing is backtesting. I'm struggling to properly validate my strategies before deploying them, especially when it comes to handling historical data efficiently and simulating realistic trading conditions. If anyone has experience with robust backtesting frameworks or has tackled similar issues, I'd love to exchange ideas. Also, if you have any interesting trading strategies and so on and so forth. So I just wanted to jump in here that because I trade crypto, I can easily put a small position in and just test my strategy live. I don't have to worry about doing it about rely on my back test. I could just see what it looks like live. I do a little bit of manual and then I just run it live. But when people are trading larger amount of money with stocks and futures and stuff like that, how do you guys? What advice would you give to someone like this if they wanted to actually back this reliably?
Yeah, it's a tough part. If you roll your own environment, there's really only a handful of libraries out there that are really well supported. The ones that I've looked at personally are Freqtrade, that's FREQ trade. Veina, which is actually a Chinese platform, which is super interesting and very robust. Zipline is the oldest one that I've spent my time in. I started using Zipline with Quantopian back in 2017, 2018, somewhere around there. And that's still open source. I use the updated version, Zipline Reloaded. And then Microsoft's QLib is really interesting. Backtrader is also really easy to use out of the box. And then there's like a whole bunch of other ones on GitHub that you'll find. Zipline is something I'm most comfortable with just because I've spent hundreds and hundreds of hours in there and have built my own data sets. But the problem with rolling your own is that you often have to buy the data and manage the data and qualify a lot of that data yourself. So platforms like Quantopian were fantastic when it was around. Right now, the leading one, in my opinion, is QuantConnect, and I do spend some time in QuantConnect. Their data is available. It's really robust. You can program in C# or Python. You can deploy your own models and actually execute the trades with brokers. And I've been investigating ways to actually send the webhook requests off to TradersPost if they don't have a broker that actually we support, but they don't. So there's definitely a number of environments out there. The one I've been noticing lately that some of the people I follow on Twitter are using is Portfolio 123, which sounds like a really generic name, but it's actually pretty good. It's portfolio123.com, and they have a fairly robust systematic backtesting system that lets you kind of fine tune your rules and strategy, and it gives you a tear sheet as well. So yeah, it just really kind of depends. There's so many different opportunities out there. I feel like the landscape for backtesting environments is growing. There's a lot of new competitors in the space. John, we just talked to a guy a few weeks back that has his own backtesting environment as well. What was the name of that?
It wasn't the options guy, was it?
No. It was. I think the word alpha is in it. No, it's not alpha.
Hawk Alpha?
No, not Hawk Alpha. There was another guy who's in Europe, British guy.
Oh, yeah.
Yeah, he's been
You
he
guys
was a
are AI
big
generating names for services.
Alex O'Neill with
yeah.
Spectral Alpha X.
Spectra Alpha. So his platform actually uses spectrum analysis in terms of looking for opportunities in the markets, or at least that's where his background is. But the technology actually allows you to run your own robust strategies. So there are a lot of cloud providers that are cropping up in the space that have their own environment where you can test historical pricing data. And then, of course, if you've got the programming skills, you can take a look at easy language in TradeStation, which I know a lot of people use as well.
I keep waiting for. I'm always scouring X for AI uses for automated trading. One of the reasons why we haven't actually done more of a series of that on Blueprint is that a lot of people will say they have these AI trading systems for backtesting, for automating, or whatever. And then when you actually look more deeply into it, you're like, okay, this is a gimmick for engagement farming because the thing doesn't actually work, or it's all kinds
It was
of problems.
built. It was built for that one social media post, and that's it.
Exactly. Well, this is one person who's and it always reminds me of John, what you talk about for TradersPost, that yeah, you might be able to set it up and it works well for these sort of things, but then are you going to be able to sleep at night if these 10 other problems can occur, these 100 other problems can occur? And comments of people who clearly have had that happen to them, where they had some losses because it wasn't set up properly. They're just like trolling the comments, like, okay, but you didn't do this, 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 and this, and I'm sure you're not got that and the other. I go, yeah, you're absolutely right. So I hesitate to spin up hey, this is an AI strategy, I'm gonna have Grok roll one, and then all of a sudden people lose a bunch of money on that. I'm not going to sleep well at night. So we'll wait until it's a little bit more.
I think that's the downside with AI, like sort of the AI trading strategies out there. There's really no way to confirm that, or there's really no way to create a backtest to know what the AI models would have responded with 6 weeks ago versus today, because there's no point in time snapshot on exactly what that model was trained on at that point in time. So the risk of look ahead bias is extremely high with something like that, especially if you're using external like sentiment information on your trade. Well, what the model knows today is not what it knew 6 weeks ago. So if you try to build any kind of backtest for this, it's nearly impossible.
I think you just asked the AI what the backtest performance is, and it'll tell you.
This reminds me of you guys are probably old enough to remember, like me, where when we had the calculators that were had solar panels on it for a battery, and you have to be careful about your calculation, because if there wasn't enough power because of the sun, the cells, your answer might be wrong. And so you have to always check your answers. And I remember my teachers at the day would be like, well, no, you have to learn all this math manually because your calculators are not always reliable. It feels like that's where we are with AI. And in 10 years from now, the AI version will be like, wait, you doubted the AI system? No, of course it's going to be able to back this everything.
This reminded me of
yet,
something
folks.
I was reading about, totally unrelated, but I thought it was just really cool when I was reading about it, about systems that are in space and how the radiation can cause bits to flip. So they have strategies for basically like verifying and running calculations multiple times on multiple different pieces of hardware to like verify the answer, because you could basically have a bug that literally only occurred in that one split second because of some bit of radiation that penetrated the hardware and caused the bit to flip in that exact second. Yep. And then imagine an engineer trying to troubleshoot a bug that only happens that one time. That would drive me absolutely insane.
Nightmare. All right, so the last one I wanted to show here is just to trigger all of us. Trading bots are overhyped. Sure. There's nothing a human can't do without a trading bot besides speed and execution. People say bots will take over trading, like how bots take over board games like chess. The difference is that in trading, you can backtest your strategy. So in a way, you already know the situation you enter, exit on what conditions. This is like in chess, where you can cheat and already have the playbook on hand and tried all combinations and possibilities. In trading, prices just move up or down only, so it really is pretty simplified. I only see AI bots winning in speed and execution and from minor edge, not detectable by humans. But humans still can win from longer term trading. So this was a nice flame thread that was on Reddit where people just arguing back and forth. Trading bots are good. I'm running trading bots, and it's making me money. And they go, okay, post your own trading bot. Let me see if it's actually making money. And then someone else goes in and they read their whole history. It's just as nice. I love it. So I figured, hey, let's get in on the fray here. Obviously our position is that trading bots are not overhyped, so we are biased in that vein. But the original poster later on says is that okay, fine, but like it helps with your emotions. Like you're not going to emotionally trade, but who really cares about that? All you have to do is control your emotions. Excuse me. I am my wife says I'm a Capricorn moon rising or whatever. I can't control my emotions when I'm trading. No matter how hard I try, I'm never as good as when I have an automated system running. So I don't see that argument there. Would you guys the claim of trading bots being overhyped in any way? Do you guys find is this validity to it at all?
I mean, sure, there's validity to the idea that there's a bunch of trading bots out there that are basically very overhyped, especially if the term AI is used. I would be skeptical of anything that says it uses machine learning or AI in any kind of like cloud-based service, especially TradingView. There's no machine learning on TradingView. The functionality is not there. There's nothing that's actually being trained in a way. There's like basic classification. We interviewed Justin Doherty and his Lorentzian classification system, which is technically a form of machine learning, but it's only on 5,000 bars of data. Could you do it on more? Maybe, and the environment might be able to process the data and not fall apart. But there's not a lot of actual machine learning stuff on TradingView, and AI as a whole. That's just a buzzword that bothers me the most. So I'd be really skeptical of that. I think, when I think about trading bots in general, people often think that if I can find something with a 90% or 95% win rate, I'm going to make $1 billion in the next 30 years or, right. 10 years or whatever, or 10 months, and the problem is if you find anything with edge, it doesn't actually require a 90% win rate. If you're looking at a robust system that has a good signal to it, you can expect anywhere from a 40 to a 70% win rate. But if the risk and reward is strong enough, then it's going to be a successful system over time. It's really about taking the right trades over and over and over and over again. And I think that's where a lot of people's approach starts to fall apart. Maybe they get their first 50 trades right or their first 100 trades right. But time takes place. We get busy. You get exhausted, emotions start to step in. And to me, and I answered this question, a different question on Twitter yesterday. Somebody was asking, what emotion costs traders the most money? And in my opinion, it's overconfidence. Once you get past fear and managing your position, with a sense of confidence about where the trade is going to go, it's actually overconfidence that leads to overpositioning. Eventually you'll get to a point where you're like, I've got this down. I've done this so well so many times. Let me just go ahead and just ratchet up my position and I'll throw 10 NQ contracts on this. And that overpositioning is what blows out your account. And if anybody's listening to this that's been through that experience and is willing to actually admit to it, then I think you'll realize that if you're taking more of a systematic approach, the position sizing model that's built into it, especially if it's percent of equity or a fixed quantity each time, is designed to also avoid some of those overconfidence problems. So it's not just fear; it's also staying consistent with your approach over and over again.
Yeah, this winning while you're losing thing is like, it's such a mind trip when you get into trading where you have to go, it's not about eliminating the losses, it's about making the losses work for you.
Sure.
When you're in, like, for example, if I'm have a strategy, I'm trying to be like, trying to get that performance number up, like you're saying, I want a 90% thing. And then I realize, no, trying to filter that out filters out a bunch of false positives that had I had that rule in, I would actually catch runs, which is what I'm trying to catch, but I just have to position it in such a way and manage my risk in such a way that I can actually be in the market. It's exposure to the market that matters. Mm-hmm. But I just wanted to bring up something over here along the lines of trading bots being overhyped. This is what's something on Twitter just recently. This guy who
I saw this
walks into his trading room and it just screens everywhere.
Yeah. I actually know what trader this is. He's actually a great trader and he's done very, very well. But he just has an obsession with being able to see all of it at a glance. He wants all the screens up at the same time.
When you systematize what you're doing, I don't know what this guy is doing, just to just illustrate the idea. But if you systematize, you know what you're looking for, you know what your setups, you're not going by vibes based trading.
Mhm.
Then to be able to represent that algorithmically and have a bot run that, to me is not. To me, just a normal thing. In the same way that you might do pre-authorized payments on your credit card for something. Okay, I know I'm going to do this. I'm actually going to have this set up automatically, and then to be able to trade across different markets, across different times, and have a reasonable expectation that your rules are going to be executed reliably. Well, you need a trading bot for this sort of thing. Well, you're going to trade at 3:00 in the morning. You're going to trade at 2:00 in the afternoon as well. Like you need
Right.
to be able to have your life. So the idea that trading bots are overhyped, to me, that's like saying computers are overhyped or like, what are you talking about? No, of course that's going to be the next evolution. You're using TradingView right now or whatever charting software. Are you doing it by hand like people used to? Sit down there and draw the technical chart? That's what they were used to do. And project it on some screen, okay, now we're all going to analyze this chart. So to me, it seemed a little bit silly to have that. And it reeked of someone who couldn't get their own trading bot working. I'm just going to say it. I'm just going to throw some shade. I think they can get their own trading bot working.
It's a very like binary way of thinking. Like you can't do both of them. Like they can't exist together.
You could certainly do both.
Yeah.
I think that's kind of the idea. I'd rather have 4 or 5 different trading bots running different markets. Some in futures, couple in stocks. Maybe they've got an options bot as well. And then I am also freed up to use some of my capital on a discretionary basis as well, taking advantage of whatever's happening in price action. But it's about really diversifying some of that capital to different approaches so that you're not all in on one approach. And this is often the case. You hear about a lot of traders that have found success, but a lot of it is just leveraged into one symbols. They are trading the Qs only or the SPY only or just futures and it's just in Q or just ES or whatever it is. Well, that exposes you to a lot of risk and a lot of additional beta on top of whatever the return exposure is for that particular asset. So you can get a lot more return or at least a more smoother return if you've kind of spread that over different markets.
Excellent. So we agree trading bots are the future. And if you don't have a TradersPost a subscription or account, you're doing yourself a disservice. That's what I heard.
That's exactly what I said. Yeah. Verbatim.
All right, folks, that's it for office hours this week. If you guys have any questions for next week or any feature requests, please go ahead and post them in the YouTube comments, send them on Twitter, post them on Discord, or send us an email message. We love to hear back from you because we want to make TradersPost the best automated trading platform in the universe. And for that, we need you. We'll be back next Tuesday for more office hours. You'll see us on Thursday for Blueprint and on Friday for office hours. But until then, we wish you guys happy trading. See you, folks.
See you guys.